Hi everyone, Lorenzo di Mattia here, manager of the macro fund for Hedge Invest. I wanted to discuss a little what happened in November and the outlook for December. In November, November was a down month. We lost about 1%. Spanish equities were the main reason of our losses. We entered the month long with the expectation of a resolution of the crisis, but more importantly, a continuation of rally and risk assets. However, what happened is the index started with a profit taking, and then all European indices started to correct. And in fact, it was a pretty negative month for most European indices. They lost from the peak about 5%. Spanish was not immune from the correction. We decided to cut exposure as we think that we are at the beginning of a broader correction in risk assets. And also there is uncertainty because of the Spanish elections coming December 21st. For the rest, every other trade was profitable. We went long the Nikkei and the DAX tactically, which we already closed at a profit. The FX book was also profitable. We closed our trades on the Swiss franc, which was short against the euro and the US dollar. And we significantly decreased our gross exposure, which was net long until last month, and we started to marginally short emerging market and NASDAQ. We're still very tactical. I'd like to discuss about the outlook for the next 2 months. I'm gaining more confidence that we are in a topping process in risk assets. So our growth significantly dropped from more than 100%. We are now around 20%. And we want to re-increase the growth in the next week or two on the short side. So the main trades that we are structuring are long volatility on US indices. Volatility is at the lowest level since the 60s. And the risk reward is tremendous in going long for the next 2 months. The Fed is going to hike again. And the cryptocurrency liquidity phenomenon is going the way we expect it to go. So we are today at $430 billion in market cap in cryptocurrencies, and they're sucking liquidity from the system. As we describe in our letter, this is the main variable we look at because the bull market has been, the main reason for the bull was the shortage of investable assets. So we're getting supply of assets. Another asset class that's vulnerable to the correction is our emerging markets. And in fact, we are targeting short there as well. With respect to the dollar, we are also building a long position. We are waiting a little more, but we believe that the new year will bring a dollar rally. Thank you very much.